Hi, everyone. Chad Smith, Mike Eklund here. And we have had some worrisome headlines of late, right? And our job is to keep you abreast of what's going on. So the coronavirus is on the tip of everyone's tongue. We've had over 80,000 cases worldwide. I think it's in 36 countries at this point in time. Over 2,800 deaths, which is very concerning.
Yeah, very concerning.
So when it comes, and then of course the stock market is feeling this pain, right? So how do we react to something like this, or what is the appropriate way to handle this? Because the media has a certain angle, right?
It is, and keep in mind the media's job is not to help you reach your financial goals. The media's job is to make money through advertisements and through page views and things like that. So just the important thing is to step back and understand, how does this impact your own financial situation, if it does. For some situations, some individuals, it's an opportunity to buy at lower prices, and for some, it's just make sure your portfolio is correctly aligned.
So we put together some research yesterday in an article on our website, posted it, and we have a chart there that shows some of the old epidemics and pandemics that we've experienced over the last 40 years. So,
yeah, and there has been 13 of them, and the market reacts negatively typically at the beginning, and then usually in the future it's at higher levels. So the reason why you get higher returns from investing in the stock market is you have to live with these temporary declines. And so that is a question to ask yourself. If you can't handle these declines, then maybe you're taking too much risk.
Interestingly, we had an old article that we posted in 2014 where we were talking about Ebola and the incident there. So this one is still unfolding. We don't know the outcome, of course. It always feels really bad in the moment because you don't know the end of the outcome. But now that we've experienced a correction, right, the market is down a certain percentage, more than 10%.
Yep.
And having volatility. So how do you respond to that? Is that something that we should be worried about?
Well, I think first of all, it's okay to be nervous. No one likes to see their portfolio decline, but understand this is normal. So over the since World War II, I think we've almost every year we have about a 10% decline in the stock market on average, and we've had 13 what's called bear markets, which is a 20% decline. I think about 12 or 13 times. So this is normal. We can expect it. Just make sure that you don't make any irrational decisions that's going to impact your ability to reach your financial goals.
So we digest all that understanding of how we should just focus on us during the good times, but then we are in the heat of the moment. We're, watching TV, seeing headlines, hearing from friends, seeing our phone, notifications coming up throughout the day, the market's falling more. It worries us. We don't know how to react to that, because the question always comes up in these moments like this, like, what can we do? Should we sell our stocks and wait until things look better? That's a question that we always think about.
Yeah, I mean, that's a market timing question. If the challenge of market timing, that's selling at the high and buying at the bottom, is you have to be right twice. There's not anyone I know of, and this is a tip here, there's no one out there that can successfully do that. So the risk is, and we'll have a chart in our notes here, is if you're wrong, it makes a big difference in your long-term portfolio and performance.
Right. So these moments are going to happen. Emotional reactions occur. Stay the course. Take a breather. Yeah. And digest the news before making rash decisions.
And I think where you're at in your life, if you're younger and you're saving money, lower prices means higher future returns, which is great. If you're retired and you're pulling money from your portfolio, just make sure you have enough cash and bonds to support your lifestyle if we do have an extended market decline. Because not many people have spoken about is, as the stock market has gone down this week, actually the bond market has gone up, or high quality bonds have increased in value.
And cash becomes a much better investment in moments like that, right?
It does. But it's important to focus on what you can control. And if you have a high price mortgage, it might be looking time to refinance. It's time to file your taxes, make sure your spending is under control, you're saving enough. You can't control what's going to happen in the market in the short term.
As always, we're here to answer your questions, so send any along that you have as this is unfolding. And if you'd like to subscribe, if you like other videos that we've done, you can subscribe, and then you will be able to watch those going forward.